Good morning, everyone. Welcome to our Wednesday morning trading room. So yesterday, an interesting day. Taking a look here at our daily chart, the market in a bit of a tailspin the whole session, settling near the close, and you can see we're pretty much taking over from where we left off. Big volume day with a big bar. That's what you would anticipate. And it looks like we've breached the breakout. And so I think the next area of interest will be an attempt to test the trend line. Now, eyeballing this, it looks like it could come in around 7,600. So the market with a bit of a bearish flavor right now. And, well, we're getting a few signals here to start. The Hawk and the Falcon both giving sell signals. The Eagle and the Raptor both a little bit slightly bullish, ever so slightly bullish. So it's still early. The market just opened. I think we'll let them sort things out a little bit. I'm not usually one for early signals, although here on the Eagle, just looking back, here was your first in sync signal. So you have a bullish band and a buy signal. It didn't look very promising out of the open, did it? But there you go. You got a little bit of an uptick. I don't think there were any reports due today. Okay, well, we've got ourselves now a couple of bull signals. Like I said, it's still very early. Okay, well, we're bouncing around. trying to get, well, trying to get bullish. Maybe the hawk is a mess. The falcon's a mess. It's hard to ignore what happened yesterday. My preference would be to short. Because that's the trend, right? The trend is down. So my preference would be to sell. In fact, right now, it looks like there's very little follow through from the buyers. If you think you have a trend, you can take any with trend signal. So if you're looking at your daily chart and you're saying, whoa, the trend is down, I'm only going to focus on sell signals. Well, you can take any sell signal, even if it's not a high probability signal. In other words, even though I may not print a number 2 signal, if I may just print a discretionary signal to short, I could look to take advantage of that. So let me demonstrate. Because I do believe the trend to be down. And all right, so here now is my signal to short. Gotta get my stop loss order out of the way for the moment. Bring my stops back. Get ready to get my stops to break even. We're about 3/4 of the way to the target. Oh, really? Get down there, scoundrels. Okay. Now this move actually has the potential to go much further, but I'm just going to take my profit on target as I tell you to do all the time. But, you know, there's an example of, all right, I believe the market to be in a downtrend, so I'm just going to look for a sell signal. In fact, that was a bit of an extended number 2 signal. It didn't print as a number 2, but we did retest this high, right, back here. The retest was rejected. We came lower. We printed a counter trend signal, or with trend, however you want to consider it. It did not print as a number 2 signal because it was just too far removed from this zone right here, but that is what it was. And now we're hitting the skids again. For the time being, anyway. May get a number one signal to short if the clouds continue lower. May get a rule of 3 to short on the eagle. The hawk is already full on bear. And the falcon is going to work a trend change signal. All right, so here we go with yet another shorting opportunity. This is what I would call an early number one signal. The number one signal has not completed yet because the clouds are not fully crossed. Come on, one more bar. There we go. Get the trade to break even. There we go. See, trading's not hard. Nothing to it. Let's see here. Aspen's asking, good morning, Eric. Well, good morning, Aspen. Cosmetic question. Your 1, 2, and 3 vertical lines are sharper than mine. It will help during my research after trading. How did you do that? Well, that's a darn good question because I really didn't do anything. But let's go here to the indicator window. Sometimes it's just your screen brightness as well, but I'll show you where you can adjust it. So you're going to go to your Raptor and somewhere down here, there's a setting for the opacity. Maybe I'm on the wrong one. Where the heck is it? I know it's in here somewhere. Oh, here we go. Opacity. No, that's for your cloud. Background opacity. No, that's the pre-signal. Where the heck? Well, it might be that one right there. But honestly, I didn't change anything. You're not the first to mention that, though. So I'm not sure why mine may look brighter than yours. It may just be the screen resolution. Honestly, folks, well, you can see, I can't even find where the setting for it is. I don't actually tweak it all that much. But the opacity is the one that you want to find. That's the value that will determine the brightness. There's a value, I believe 255 is the maximum value that you can give any color. And what that will do is it will make it stand out more. It will make it more solid. You know, when in doubt, shoot Ben an email, because he's the guy who tweaks all this sort of stuff. Okay, looks like we had decent follow through on that number one signal as well. All right, let's put that away for now. The trend definitely down. Here's another situation where, and I'll just show this to you. Here's a discretionary signal. It doesn't line up with anything. It's just a discretionary signal to short. If you believe you have the trend, then you can pick up on any signal to sell, even though it may not be one of our high probability signals. Oh, look at that. I got in just a hair late. I wanted to enter a little bit earlier. Come on. Are you going to give me the swing? You stinkers. Get down there. Just a hair late on the sell button, but you get the idea. Trend is king. Whoa, look at that. So that little hiccup, I was maybe a little bit fast with my stops, but there we go. And looks like we blew right through the primary support line. Little hesitation, not a whole lot. Looks like we are on our way to 7,600. We may not make it today, although yesterday the market dropped, what, 100 and change? Hey, way to go, Aspen. Aspen says it's amazing. 2 small losses in the beginning, and a good win covers it all. Yes, sir. That's the objective, to walk away in the black. Now, for the benefit of those of you who are new, who haven't heard me go over this time and again, I think it's important, or certainly to your advantage, to have a trade quota. Overtrading will kill you. It will devastate your account. And I don't think I'm over exaggerating. I see it all the time. I'll save you a bundle of money for those of you who are considering hiring me for one-on-one coaching. If you want to hire me for coaching, I can almost guarantee your problem is overtrading. I had a fellow write me recently, and I better make sure he's not in the room because he may take offense. Nope, he's not here. I can talk about him behind his back. It's nothing bad, but he sent me a bunch of charts from the Raptor, wondering, what am I doing wrong? Why are these signals not working out? I'm ahead $500, and then, the next trade I lose it all, and I finish the day, I'm in the red. And so I wrote him back and I said, you're up $500. Why are you still trading? You're up $500 per contract, mind you. Why are you still trading? Don't you know? And here's the part that I go over all the time in the trading room. If you can earn $100 per contract per day, there is literally no limit to the amount of money that you can make trading. Because if you can do it, and I know it seems like nothing, in the back of your mind, you've got this image of, the boiler room trader, or the guy, the high frequency trader who's in and out of the market, the excitement, the tension, the adrenaline. There's guys that trade like that. I can't do it. If that's what you're looking for, you're probably going to have to find somebody else to show you how to do it, because while I've seen guys try to trade that way, a lot of them almost give themselves a heart attack. They're so jacked on coffee and nicotine, watching a 30-second chart unfold. You don't need to do that. You need to find one or two good trades that you can risk money on and that you can make money. Because if you can make that $100 per contract per day, now it becomes a numbers game. So you say, well, Eric, shoot, $100, I can't make a living on $100. No, but what if you traded 3 contracts? Now all of a sudden that $100 trade became $300. 5 contracts, $500. 10 contracts, $1,000. 15 contracts, $1,500. And that is not out of the realm of possibility. Now, if you're starting small, as I know many of you are, that $100 objective will translate into approximately $15,000 to $20,000 over the next year. Okay, that sounds a little better, doesn't it? Even if you're starting with a $10,000 account, a year from now, you could potentially be trading a $30,000 account. Well, now you're in a position where you can trade 2 contracts. Now, next year or the following year, you can be anticipating maybe a $40,000 year. A little bit more interesting. So now your $30,000 account is now $70,000. Now you're in a position where you can easily trade 3, 4, maybe even 5 contracts, all from that measly $100 trade. Where I was going with this as well, though, is the trade quota. I found that my most profitable days is if I trade 4 times or less. And usually the emphasis is on the less part. Because the market is sneaky. They will give you a perfectly good looking setup, something you've seen the last 2, 3, 4 times, and the trade will not work out. Or it will work out, but it will require a huge stop. For instance, here's a green bar sell, high probability signal in the eagle. We could easily take that. The trend is down. But where are we going to cover this trade? The proper stop is 2 swings back. So there's swing 1, there's swing 2. I don't know about you, but that's a little bit rich for me. Now, your original stop you could probably place somewhere around here, and now that the market's getting some traction, you could certainly bring it into here, or maybe even into here, down to break even already. And the trend seems to be reasonable, and it should probably hit its target. But my point is this: the more often you go back to the well, sooner or later the market's going to hand you a losing trade. So I usually like to trade 2, maybe 3 times, because I know that I can probably get 2, maybe 3 winning trades without incurring a loss. So now my $100 per contract is potentially $300, and now the numbers really start to add up. So if I get myself to a position where I'm trading 3 times a day, I make $100 each trade, that's $300 total. If I'm trading 3 contracts, hey, I've just had a $900 day for 3 contracts. That's, if you're trading a $20,000 or $25,000 account, that is not out of your reach. If you're trading a $10,000 account, okay, you're just going to have to bide your time, get consistent, get that profit. And here's another little nugget for you. If you cannot be profitable 1 time per day, you got to stop trading until you can find that high probability signal that you can risk money on. You have to learn to recognize the setup. Keith makes an excellent observation here. He says, I like your analogy of a regular job. If you're not doing anything, you're not productive. As you said, the opposite is in trading. Patience and wait for the setup and don't overtrade, which I'm guilty of, and I'm working on that. I figured out that I have greed spurts every now and then. Well, we all do. And like Keith said, we come from a job mentality, from a production line mentality. Whether you've worked on a production line or not, it doesn't matter. But when you're at work, you work to make money, but that is not the case in trading. In trading, you have to find the right opportunity. You have to wait for the good setup. You have to wait for the trade that you can say, yeah, okay, the trend is down. It looks like we've broken out of a trading range. We've had a retest. Here's a trade I want to take. It's a high probability signal. I can keep my stops. Eric says keep your stops 2 swings back. So there's my entry. Here's swing 1. Here's swing 2. Yeah, I can do that. I can afford that. The market goes down, boom, hits your profit target. Thank you very much. And on to the next. That, by the way, if you didn't recognize it, was a very nice setup. Why was that a nice setup, you say? Excuse me. This is something you want to get used to looking for. This is almost as good as printing money. When the market gives you a trend and then hits this little consolidation, you can 9 times out of 10, the market will continue with trend out of that consolidation. Even if they broke the upside, 9 times out of 10, they will continue with that with the trend outside of that consolidation. So once you hit that consolidation, then you better start paying attention because you're going to get a chance to make some money. Great question from Aspen. Would you feel disappointed if the market runs more after you made $100 and the market goes to 500? That is the dilemma of every trader. And it's really a personality thing. Excuse me a moment. Don't know why I got a frog in my throat this morning. I worked with a fellow. He could not stand to see the market move without him. So he gets here. Let's go to the Raptor. It'll look worse. He could not stand the thought of taking a trade here, getting out here, and then having the market fall out of bed here. And so I said to him, well, if you knew the market was going to go lower, then why didn't you hang on for a bigger profit? And of course, his answer was, well, I didn't know the market was going to go lower. Oh, well, if you don't know the market's not going to go lower, then don't beat yourself up for taking a profit. The fact of the matter is, there will be probably 2 or 3 days a month where the market makes a very strong rally. So the rest of the time, it means the market's going to be making smaller moves. It's going to exhibit bigger swings. It's not going to have this huge follow through. Now, there will be days like today where you might sense that, okay, the market's in a strong trending move. Maybe I'll try to hold on. Or if you're in a position where you can trade multiples, let's say you can afford to trade 3 contracts, you can always take profit on 2 and try to run out the 3rd, right, in case it goes a little bit further. It is a desirable strategy, but it's usually one that's only available to larger account traders. I'm of the opinion that the smaller your account, the more you should take profit on target. Remember, it's not the trading frequency. It's not even these home run trades, although they are very nice when they happen. It's your ability to consistently bag that winning trade 2 or 3 or maybe even 4 times a day. That is your objective. So to answer your question, does it bother me? No, not in the least. Because I know if I've made my $100, then I can multiply the earnings by trading more contracts. Would it have been nice to hold on here for a $500 move? Yes, absolutely. Did I know the market was going to go lower? Well, I suspected. I suspected it would go lower because the trend does seem to be strong, right? They didn't waste very much time out of the gate heading lower. But look at here. A lot of times, like this number one signal, the market came down, hit your profit objective, and then started going against you. And that is not at all unusual. Here's another signal. The market comes down, hits the profit objective, starts to go against you. And now we start to show a little bit more momentum. We get another signal. The market hits the profit objective, makes a little flinch, but then continues lower. Gives you a bigger pullback. Prints a signal, hits the profit target, pulls back. The problem with trying to hang on for a larger move is stop management too. That will give you fits. It's obviously easy to trade in hindsight, but I guarantee you, if you were in this trade and you had your initial stop back here, when the market started to roll against you like this, you would not have kept your stop up here. Dollars to donuts, I bet you probably would have rolled your stop at least to here, maybe even to here, only to, oh, they didn't tag you out. I thought they got a little higher. I was going to say only to get tagged out and watch the market move on without you. Whereas taking profit on target, you got your target, great, you just wait for the next signal. Now, there's pros and cons for each, but like I said, I believe that if you're a smaller account trader, you'll probably be better served taking profit on target. Wow, look at this crazy move now. We make a huge move lower, and here we are, we've practically recovered half of it. We're back to the primary support zone. What a roller coaster. All right, let's check the news. Let's see what the president has been tweeting. Yeah, Aspen says too much turmoil in the world, but it makes trading interesting. Yes, it does. Oh, who wants me this morning? Oh my gosh, who's bugging me now? Hold on, folks. I gotta take this phone call. I'll be right back. My mistake. Telemarketer. All right. Now here come the sellers again. It will be interesting. This big move higher really shows a lot of strength on the buyer's part. Probably going to see a little bit of back and forth here, a little hesitation, perhaps a sideways trading range. Ugh, what's he bugging me about now? Okay, so here we go. I think we're starting to build that sideways range. Well, we're a little bit in limbo here right now. Probably sort itself out shortly, but I guess when in doubt, it's still a better call to short, but I would think the buyers would try to establish a bit of a sideways range here, that especially given we're in the hard edge, they would try to push back near the highs, this high, not the daily high. Well, we're still kind of searching for that bottom. Okay, everything is with trend. Let's try another with trend trade. So I'm looking to take advantage of that number 3 signal. There we go. And I'm going to leave my buy order in here. If I don't, I was going to say, if I don't get filled, I will buy the market up. Okay, let's see how they do at these lows. There we go. I can get the trade to break even. Oh, come on. What's with all this flinching before you hit my profit target? Yes, stinkers. Shoot. Oh, here we go. Oh, look at this. We got a 2-3-2 setup, which is actually kind of bullish. All right, let's try this to the long side now. They didn't want to go lower. Let's see if they want to go higher. Here we go. Well, that worked out okay. Got the break even. The Bollinger Sweep flipped over. We got the 2-3-2 signal, which is a stronger setup for a reverse. All right. Well, yeah, Scott says, I hope that was a +2 on the break even. It certainly was, Scott. I have, how many trades is that now? That's 4 trades, I think 4. And they're all profitable. So my trading day is done. And now we're back in the sideways slump. All right, folks, I apologize, but I've got to close the trading room early again today. And we'll do this again tomorrow. So if you have any questions, please ask. I will answer before we close things up. No questions. All right. If you're going to hang with the market for the rest of the day, we're probably going to see one more uptick. So we got a little bit of a bull push coming here. And then I think the sellers are going to probably step up again. We've made a big range lower. We've made a big move higher. But it seems that we are consolidating a little bit. But for the time being, the sellers still seem to have the upper hand. All right, everyone, got to run. I will see you tomorrow. Bye for now.